What is going on? It's episode 16 of our sneak peek for the week, and we've got a big week coming up, so it makes a lot of sense to do this one tonight. A couple of things right off the bat we're going to talk about. We're going to talk about what big financial players have earnings coming up this week, what the economic calendar looks like for the week, and then additionally, we're going to talk about a few other short topics just real quick here. But let me kick it off with this. We ended last week with a pretty darn exciting event. S&P hit an all-time intraday high. If you don't know what that means, what it means is that the markets are hitting highs that we have never seen before, even in light of everything that's going on, all the events that we're surrounded by. So this is a pretty big deal because this means that the markets are still going in the right direction, and it's hard to tell exactly why that's the case. There's a lot of great economic indicators, there's a lot of good earnings, but it's not matching some of the things we're hearing, like still we're seeing tons of forbearance on mortgage loans. We're still seeing a lot of rent not getting paid to investment property owners. So there's sort of this feeling of this underlying, just what the heck is going on. So I think that for the week coming up, it really, really is going to pay for you to know if you own someone who has an earnings event, if you're paying attention to those economic indicators that are going to be coming out in the following week. I think it's going to be more important than usual to do so. I'll say this. I'm never a believer in the super over the top, like the markets are going to blow up or they're going to crash or they're going to go through the roof. I think that the markets are as efficient as they possibly can be in 2021. I think that it's very important to understand directionality, try to read the economic plays and indicators that you see. And I also think this is the reason why, especially swing or momentum traders do so well, is they're really following the long-term trends. They're not trying to think about where to jump in and jump out. So without further ado, let me sort of just jump right in here as usual. So let's go over a real quick earnings calendar for the week. I'm focused purely in the financial sector for the most part here. Financial could be traditional banks, insurance providers, PE firms that are publicly traded, etc. I think major health players. There's some others in here as well that I thought were of note, so I just want to call these out as well. So Monday, nothing I'm really going to talk about here, so nothing to worry about. But let's jump into Tuesday, and this gives you really an extra day to think about your positions you're in. If you're heavy or overly weighted, it gives you a chance to get a feel for what the analysts are calling for earnings. So Tuesday, we're looking at JP Morgan Chase, JPM, Goldman Sachs, GS, Conagra Brands, CAG, Fastenal, which is FAST, all are coming out before the market open. So a lot of big names in there starting the week off with Tuesday. Now, Wednesday, we're right back at it. Bank of America, BAC, PNC Financial, PNC, Wells Fargo, WFC, Delta Airlines, which is DAL, BlackRock, BLK, Citi, which is C, are also all coming up before the market opens on Wednesday. So we're only halfway through the week, and already there's some major, major players. I think that before I even jump into Thursday and Friday, I think that the key takeaway here is, depending on how good things come out on Tuesday and Wednesday, we could really see the market follow in a big, big way because these are major, major players. These are extremely large cap companies. And I think that when these things move positive, everything else tends to move positive with it. That's not investment advice at all. It's just a general feel for the market that when the big players are moving positive, we see others follow. So on Thursday, we see Bank of New York Mellon, which is BK, US Bank Corp, which is USB, United Health Group, UNH, the Progressive Corp, PGR, Truist Financial, TFC, Cintas Corp, CTAS, Morgan Stanley, MS, are all going before the market open as well. And then one additional one is Alcoa, AA, is going to be after the market closes. And then finally on Friday, we're looking at Charles Schwab, SCHW, and State Street Corp, STT, also releasing earnings before the market opens. So this is really a lot of the major banks in the country, a lot of other major brands and well-known companies that sit within the Fortune 500 to 1,000, certainly. So make sure you're prepared to understand what this represents. If you hold indexes like the Spider Financials, any kind of financial indexes, if you own VTI, for example, you can have a lot of these companies in there as well. So just know that if the earnings are great, you could see a great uptick, and that's something to be aware of. If the earnings come in weak or below what they expected, this could be a major hit as well. So especially coming out of the momentum of Friday, having those intraday highs in the S&P 500, there's a lot of momentum to see things go up. And if these come out really good, then that could really help to push that forward in a big way. But any kind of momentum stoppage or change, especially with the underlying economic indicators we're seeing in general right now in the US especially, these are definitely areas to be aware of and things to watch out for. So one thing I would ask too is, before I jump into the economic indicators, Let me know if you have any deeper questions as far as like where to find this information, how to understand what the earnings or estimates are looking like. If you want to know where the analysts put their sort of responses post this, I think it's important to know that as well. So let's jump into what's happening from the economic calendar perspective, because as usual, it is going to be really, really busy. Now, I don't expect that everything I say is going to be easily followed or that you're even going to go out and take a look at these, but I want you to start getting really into this motion of understanding that a lot happens every week that isn't just meme stocks or crypto. There's a lot of core market fundamentals from the major players in the US economy and global economy that have news coming out on a regular basis. And it really pays to know what's going on because, again, it creates sort of a directionality here as to see where the markets are going, what's driving it. And then these are where the major players typically are found as well. So from an economic calendar perspective, on Tuesday, we've got the NFIB Small Business Optimism Report. We've got CPI month over month. We've got CPI excluding food and energy month over month. We've got CPI year over year coming out, CPI excluding food and energy year over year, and monthly budget statements. That's a lot. That's just on Tuesday. On Wednesday, we have the MBA mortgage applications. We've got PPI final demand. Excuse me, PPI excluding food and energy month over month. PPI final demand year over year. PPI excluding food and energy year over year as well. So these are really important things that, combined with those earnings reports and the things that are happening in the general public markets, combined with economic indicators, start to really create clarity, create signal, create direction around what's happening in the markets. That's why it's really good to know on a Sunday night or a Monday morning what's going to be happening in the markets in the coming weeks, because it helps you to sort of prepare and build a point of view around where you think it's going to go based on what you're seeing from the expectations of the reporting. On Thursday, we see a whole bunch more coming out. Empire Manufacturing, Philadelphia Fed business outlooks. We're looking at initial jobless claims, which is always a big one. Continuing claims, week ending July 3rd. Looking at import price index, export price index month over month. Industrial production month over month. And capacity utilization for June. So again, these are really, really big things that maybe individually don't drive a ton, but put all together, create that flow, that momentum, that understanding of the directionality. And then finally on Friday, just to round this out, we see retail sales advance month over month, retail sales excluding autos and gas. University of Michigan sentiment comes out around July's preliminary numbers. Total net TIC flows and net long-term TIC flows. So these are not small things. These are a lot of reports covering a lot of different materials, really helping the market to get a feel for what's likely to happen, what kind of long-term trends we're seeing. And this is especially something I would really urge you to do. Pick any economic sort of month-over-month indicator you like. Doesn't even matter if it necessarily impacts what you're doing or something you're interested in. Just pick a random one and start plotting it every time something comes out to understand, did we beat expectations? How much were we off? If you track it over the long term, can you start to follow a trend in economic indicators? Because what I think you'll find is that sometimes the simplest way to think about these is not whether or not you can predict the outcome of CPI or economic indicators like that, but more so, can you get a feel for how they're trending over time? Are they starting to rise? Are they running within a channel? Are they declining? And which analysts tend to be right on these kinds of guesses, so you can start to decide who you want to follow from an analyst perspective. Because it's not just important to understand, what the earnings are or what the economic indicators come out to be. It's also good to start to get a feel for who in the marketplace, as you're a new investor or even experienced investor, who are the people who tend to get it right more? Who are the people that are more accurate when they do come out and say what they think something's going to be from a post-release perspective? So we're looking at these major players releasing earnings this week. Pick a couple of them and start to look at the individual analysts that contribute to the reporting and see how accurate they are over the long term. And see if they're also, this is a really, really big one that you should be doing anyways, but I'm going to call it out. Not just a question of knowing when an analyst is right or wrong on an earnings report or release, but also, do they have price expectations, or are they calling a price for the future? Most of them do. It's not hard to find this. And what's going to be really important is to understand when advisor, XY says, I believe that, this stock is going to hit a price target of whatever number. It's really important to understand both the time frame of that call. Usually it's a year, but also, are they right? How often are they right? How often have they been right in the past? And if nothing else, it helps you to see, is this in line with what everyone else is calling? Is the most accurate Analyst, the one who seems to get it right, but maybe within more of a range. And then, of course, super obvious point, I hope if you've been watching this for enough weeks, always still protect yourself, right? Analysts do get things wrong. Earnings do come in lower than expected. Earnings do get revised. It's really important to make sure that you're aware of these things. And I know this is a broken record, and I know don't want to hear it again. Just because you don't own a particular stock, like American Airlines, Alcoa, Goldman Sachs, right? Whatever. It doesn't mean that you don't have a huge position tied up in an index fund or a mutual fund and you don't even realize it. So you once in a while, make sure you're going into those index funds and you're looking at the top holdings, right? If your top holdings are all tech and you think tech's about to get crashed or crushed or whatever the case might be, well, think about it. You're owning something that you don't even agree with the premise of. Now, that being said, I'm a long-term guy, and I think long-term is the way to look at the markets anyways. But, these are the things you have to do to be a real investor, a serious investor, an investor who's working long-term to build real wealth. Now, as a final point, as was pointed out by my kids who are really good at this, and of course my wife who gave it the blessing, I'm trying to figure out how to make this setup behind me look a lot better because it's looking pretty crappy and it's sort of just building up lots of stuff over time. I've got old crypto miners, I've got work stuff, I've got the kid and family stuff up here. My artwork's sort of permanent over here, but I would love if you're still watching this and you review this over the next couple of days. Give me some suggestions. What do you think? What would look good back here? I know that the lighting is sometimes all different shades depending on the time of the day, and I'm working on that as well. But I'd love some feedback. We're getting up over 1,200 subscribers now. Seems to be growing pretty nicely. Very excited. We broke 250,000 views this weekend. So that's pretty cool as well. So hopefully people are getting value from this. I do get a lot of good feedback on the Facebook page. So that's been great as well. But I'll just say one more time, right? We are trying to really get stuff across here that's easy to understand, very easy to work with, giving some perspective as to what's likely to happen and how it could possibly impact you or your portfolio, what to do about that, and just provide it in a really easy format. I like to think about it in the terms like this. When I'm going over this, what can happen in the week ahead or what I'm seeing for news, I like to think about, what if my audience was very young? I'd be able to understand some of these topics? And that's where I try to come at it from, is very basic. You don't have to be a data scientist to understand economic indicators. You don't have to be in the market for 35 years to be able to read an earnings report. Sometimes it's enough to know the numbers, know the people who are reporting on it, and their level of accuracy over time. Super easy stuff, right? If the numbers go up every month, that's a trend that goes up. If they go down every month, that's a trend that's going down. That's at least enough for me to start building an idea over what I'm seeing week over week over week, month over month over month, etc. So with that, I hope everyone has a great trading week. As you can tell from the beginning of this video, there is a lot going on. And I think it's something that, especially with the amount of risk that's being seen in the market and sort of all these, we'll say, quote unquote, warning indicators, take that as you may, there's a lot of reasons to have some degree of concern. Not fear. Fear is never the right way to feel about your investing or trading. But certainly if you're not thinking about what would happen if, you should be super aware of that. My biggest comment I'm going to make right now, and then I'll sign off for the night. If you were in a cash position, and to explain this real quick, cash position would mean that your portfolio is not leveraging leverage, right? You're not borrowing money, trading with borrowed capital, buying stocks with borrowed capital, et cetera, or any other investment for that matter. Then a market downtrend or a falling of prices simply means your portfolio value goes down. That's okay. You'll survive it. They usually come up over time, right? That's what we've learned. What I really want to call out here, which is extremely concerning, is if you're highly leveraged, you can take huge, huge losses. Then you can get called out on those losses, have to liquidate to pay back that debt. And let me tell you, if you get a 30% hit on your portfolio and then get wiped out on the leverage, it's going to be very hard to ever get back to that point. I'm not saying you can't. I'm not saying you won't. But it will be very, very difficult to go all the way back when you don't have the capital, the access to the capital, or the assets to then ride back up when prices return. I think a lot of people saw this at the very beginning of the COVID crisis, where they got closed out of leveraged positions. In fact, completely separate from COVID in the stock market, we saw this happen recently, where as Bitcoin and other cryptos started to fall, there were tons and tons of people whose lives have just been totally blown up because they were so deeply leveraged in crypto, which in and of itself is a speculative, risky asset class, to then be so leveraged to the gills that they got completely wiped out. And who do you think swoops in and buys these things? It's not other small retail traders. It's big banks. It's major investors. It's the whales, as we call them, that are able to come in and basically buy at bargain prices and once again reap the rewards. Stop feeding the whales, right? Be smart with the money, do the right things, understand the leverage. It's so important that you understand, like, what is your margin of safety that you have to maintain. Never take it to 100%. I don't recommend you use it in the first place, but that said, certainly do not take it to the limit. So anyways, with that said, I'd love some feedback on The Office. I'd love to see what you think about these economic indicators. If you have any opinions on them, I would love to hear what you think about the stock analyst reporting that's coming out on what I mentioned at the beginning of the call. And with that, have a great week. Have a good night. Hopefully you have some good trading and investing going on. And to everyone who supports the channel, just thank you again. We really do appreciate it. And with that, thank you so much, and we'll talk soon.